Welcome to Trade of the Week with me, Zinati Kuman. This week's analysis, we kick off with the JSE, Stefanutti and Premier Group. Then we cross over to the US's Fair Isaac Corp and Sezzle. And joining us with his survey of these counters is Loyiso Mpeta, CEO of Mshindi Bingwa Group Holdings. Thank you so much for your time, Loyiso. We're starting off with a counter in the food production sector. I mean, I would say that this is a counter where, you actually need to be very careful in terms of how you pick. But actually, Premier is one of the favorites that I have seen. Of course, we know that they recently relisted on the JSE. So just talk to me about your view of Premier Group at this point.
Yeah, so we last covered Premier, the last time we covered it was the first time coverage as well, and that was towards the end of last year. Now, there was something that stood out for me, which I mentioned, which was from that listing in 2023, the stock had already traced out waves 1, wave 2, and I emphasized that it's currently in wave 3, but within this higher degree third wave, it was in the 5th and final wave. So the forecast was for a pullback for wave 4 and one more advance to complete wave 5. So as much as the trend was still at a very mature stage, there was still upside potential.
Right.
And what has actually played out is as we had forecasted. So this 5th wave of wave 3 did push up higher, not too much higher, to then complete this 4th wave. And we had this, this 3rd wave, and then we had this correction for wave 4 at that bottom at 115, and now the stock is currently in that 5th wave as forecasted. So again, the 5th wave, virtually impossible to forecast how strong or how far it will travel. So if you're not already in the stock, I think you're probably a bit too late. If you are in the stock, this is where a trailing stop could come in handy, because you never know when that 5th wave is going to reverse. And as we know, after a 5-wave advance, the expectation is for a 3-wave correction, but that will only be confirmed once the stock price breaks below this level again, which is quite some way off. So you want to be locking in profits at this stage rather than trying to chase more profit. So once the stock is in this 5th and final stage, then there's more probability for a pullback than for continued upside.
And actually, I mean, if you are already in the stock and you actually want to then limit your losses, what levels would you be looking at in terms of maybe trying to secure a stop loss?
So the thing with a trailing stop is you don't want to be too close to where the current market price is.
Okay.
And the previous pullback is always a good place to put your trailing stop. So I would recommend a trailing stop just below this pullback that we had here. So this is at around 130 Rand a share.
So not as far as that bottom.
No, not too far off, because you want to lock in as much profit of this 5th wave as possible, but still giving the stock sort of breathing room to potentially move higher. So that's the beauty with a trailing stop. I mean, you can set it based on a volatility measurement or based on a percentage. So that's how. And I mean, I must say, Premier, the fundamentals are still pretty solid.
Yes.
They came out with annual results not too long ago. Some good gains in terms of revenue and profit margins. And they also gave fairly good looking sort of outlook for 2026, banking on a reduction in wheat and maize input prices. So the fundamentals still look good, but as we always say, once the cycle completes 5 waves, even if the fundamentals are still good, we can still have that correction. So
all right. Well, let's get into another JSE counter. This time you're going into construction, Stefanutti stocks. This is actually a small one that a lot of people don't actually look at. Why this one for today?
Yeah, so again, funny enough, we looked at Stefanutti last year in the same program that we looked at Premier. So I thought it would be a good time to do an update as well at the same time. So just to recap, I emphasized this massive bear market from 2007, which bottomed in 2019. So it's really been tough going for Stefanutti. But this bounce from November 2019, in terms of its general structure, it was looking as if it is a impulse. And if it is an impulse, it could be the very, very early stages of maybe a more longer term bull market to sort of recover all these losses over the last, 13 years.
It's been a slow move up from, 2019?
Yeah, it has been. But again, just looking at it from a wave perspective, when we did cover it last year, I did emphasize this completed wave 1, wave 2, wave 3, and I was saying probably in the early stages of wave 4, and therefore the forecast was for one more move to complete wave 5 of either a wave A or wave 1 of higher degree. And actually from when we covered it, it didn't move up from there. It continued going down and seems to have bottomed at 2.73 Rand. So this then is that wave 4 I was forecasting when we covered it last year. Now, this is where it gets a bit tricky because from 273, we can see we have this very strong bounce and the stock has pulled back and is consolidating a bit. Now, this is where it gets a bit interesting because there is a probability that wave 5 has terminated at around 4.70 Rand. Now, when you have this situation where the fifth wave terminates slightly below the peak of wave 3, this is a scenario that is known as a truncated fifth wave. So that's another Elliott wave term.
This is a new one that we're learning
it's a new one, because it's such a rare phenomena, but it happens from time to time. But alternatively, if this push up to 470 is not all of wave 5, but is part of an unfolding bigger structure for wave 5, then I'm looking at it as a wave 1, a pullback for wave 2, and then we can expect further upside for wave 3, another pullback for wave 4, and then wave 5. So if this is the case, then I think the stock has the potential to move up towards the 6 Rand, 7 Rand region. But again, the key level to watch is 273, because if the stock does correct and break below 273, then that truncation scenario will kick in. And I think this sort of uncertainty that we're seeing in Stefanutti at this juncture also ties in with its fundamentals. You know, currently they're going through quite a restructuring, disposing of its Mozambique and Mauritius business, restructuring its loan books. So there's quite a lot of things happening that could change sort of the structure of the business. So it's also very important to keep an eye out on what's happening there.
And obviously it operates within an infrastructure landscape that's also quite uncertain, particularly also looking at how slow the government is in rolling out those infrastructure projects. This is very, very interesting. So it could be a very, very short-lived wave 5 or a really elongated one.
And I mean, again, looking at the construction industry, you know, we just had Marion Roberts unwinding now. So who knows, maybe less competition, you know, those who survive.
Yes.
You know, this is where I like the Darwin evolution theory of survival of the fittest. Concept.
And it's quite interesting that they're also just going through an internal thing so that they can actually have muscle to survive that broader construction landscape. Very, very fascinating. All right. Well, let's cross on over stateside, and we're looking at, firstly, Fair Isaac Corp. I actually remember there was a question on Stockwatch on this, and I actually didn't know what it was about. Quite interesting. So they kind of measure, they're like an Experian. Okay, but just in America, where they basically measure people's credit scores.
So what they do is it's more like a software application company in the tech space, and what they do is basically measure, say, a manager's decision makings.
Okay.
So it's almost like a scoring system where they measure your decision making and sort of. It's a very niche, specialized field that they operate in.
Okay. Well, what are you seeing there?
Yeah, so very interesting one. First time we are covering Fair Isaac. And continuing with the theme we had in the previous show, where I was emphasizing rotation and looking at the S&P 500 making record highs almost every week, and saying there are those good companies that have disconnected from the broader market. They've had significant pullbacks, and those pullbacks present opportunities.
And not even out of the tech sector, even in the tech sector.
Yeah, in the tech sector, but not really in the AI theme.
Yes.
So I think that's another very important distinction to make when you're looking at tech, is that not every tech stock is really
AI.
in the AI theme.
Yeah.
But actually, when you look at the nature of the operations of Fair Isaac, AI adoption and integration is part and parcel of their sort of future rollout, because in terms of what they do, AI can also speed up that process. But unlike your other tech-heavy stocks, they haven't been throwing the AI theme into their whole operation and trying to, so that's why they've kind of missed that AI gravy train. But that's where the opportunity comes in, because once they start to kick in, then that recovery should take place.
Okay.
So just a quick run through. We can see how strong this company's performance has been since listing in 1988, almost a parabolic rise since 2009 after that global financial markets crash. And we can see the significance of this correction from November last year relative to the other smaller ones that we have seen historically. So just putting it on log scale, just to sort of show the percentages in terms of the bear markets that Fair Isaac has had. Again, here you've got about an 80% drop, but small numbers, $47 to $9. Much slightly bigger one back in the COVID-19 crash of 60%. But this one you can see, even though it's 45%, but from a price perspective, it's much larger than the previous bear market. So that's why I'm saying this current correction presents a great opportunity, because it's much, much bigger than what we've seen previously. So for a stock that is generally defensive, this magnitude of a pullback is quite a significant buying opportunity.
Okay, it's not something that you necessarily have to be concerned about, but actually looking at it as more of an opportunity.
Yes.
Okay.
So what I've got here, I've got the S&P 500, which I've overlapped to the stock price. I've got the correlation coefficient on a weekly basis with a 20-week rolling period. And we can see there are periods where there's a very strong correlation between the S&P 500 and the stock. But most significantly, we can see from this peak in November 2024, there's been this massive disconnection between the broader market and the stock itself. And in fact, when you look at it from this period that we are looking at now, the correlation coefficient is at its lowest level in over 8 years. So this is a significant sort of rotation play opportunity. And also when you look at it from a wave perspective, I mean, it's a textbook. Wave 1, wave 2, very strong wave 3, and this correction is ABC for wave WX, another ABC, so a double zigzag for wave 4. So you can see from this March 2020 COVID sell-off low, the stock is tracing out a 5-wave impulse, currently in wave 4. And if you look at this key level here at $1,300 per share, even if it does make sort of like a correction or pull back lower, I think the stock is more likely to push up at this current juncture than further downside. So looking at the risk-reward ratio, I think there's much upside potential from current levels than a continued downside sell-off. So very bullish looking picture for Fair Isaac.
All right. Well, let's go on to our last one. Just a quick little thing to throw in there, that Fair Isaac's listing is as old as me.
You just revealed your age. That's a rare thing. Okay.
All right, let's go to Sezzle. Is this also a tech company, but is it a buy now, pay later?
No, not really. So they're more in financial services.
Okay.
And what they do is they operate a payment platform. So you can say also software tech, but for financial services, for bank-to-bank transactions, for individuals and businesses.
Okay.
So it's a payment platform, basically.
Okay. Well, what are you seeing there?
Yeah, actually this one much more straightforward, very simple. Listed in 2023, bottomed very quickly from its IPO and had a massive run, which I'm labeling as wave 1, a textbook zigzag for wave 2, a very powerful move for wave 3, and now I'm looking at this as a correction for wave 4. And we can say the stock does have a tendency to have these very deep corrections. This wave 2 shared about 69%, and this wave 4 is down 55%. But again, just from a wave perspective, the forecast now is for one more push up to complete wave 5.
That would be a big one.
That would be a big one, exactly. And again, just to overlay the S&P 500 and looking at correlation at correlations, I'm looking at this one on a daily perspective, 30-day rolling correlation, and you can see again there are periods where the correlation is very strong, but currently we can see from this peak, similar as to what we saw with Fair Isaac, from this peak in July 2025, a very, very strong disconnection and the correlation coefficient at a record low. So again, when you're looking at it purely from a rotation perspective, a classic case of a potential rotational play. So from this peak of wave 3, this correction also looks like a textbook ABC zigzag. So the forecast is for more upside. Again, you can see that this bounce from 83.51, it's still early stages, but if you do have a medium to long-term perspective, I think at current levels, there's more potential for upside than more downside. So that is pretty much the call. This is for wave 4, and the forecast is now for wave 5, and the risk-reward ratio is just much more favorable to the upside. So pretty much the same play between Sezzle and Fair Isaac. Rotation play, that disconnect from the broader market and buying.
You're still within tech.
Exactly. You're still within tech, basically, and you've got a pretty significant correction dip that you are buying. And that's the important thing sometimes is you're still buying good, solid companies with good fundamentals, but at a much, much greater discount than what the broader index is trading at. Those are the opportunities you should be looking at within that rotation play.
All right. Well, thank you so, so much for your time. Really, really fascinating insights that you've given us today. Really appreciate your time, Loyiso. That was CEO of Mshindi Bingwa Group Holdings, Loyiso Mpeta. That's all for this week's segment, but stay tuned for lots more coming up right here on Business Day TV.